The JSE All Share Index gained as much as 0.8% to touch a new record high of 78,160 points this morning. The gains are supported by rising prices of commodities, notably oil, gold and platinum group metals amid the ongoing conflict in Ukraine. For a sense of how the markets are faring at midday trade, we're now joined by Karl Gevers, portfolio manager and co-founder of Benguela Global Fund Managers. Thank you very much, Karl, for joining us this afternoon. So have we been able to maintain this high? How are the markets faring this hour?
Yes, good afternoon, Duduzile. The markets are still in the green, about 6.6% up the All Share, mainly driven by the resource sector, as you indicated, with the Kumba, Ore, Glencore, Exxaro, BHP, Anglos, all up over more than 3%, driven by the stronger commodity prices. And that's obviously driven by, for example, the oil price up steeply to over 110, touching $115 per barrel, given the supply concerns with the Russia-Ukraine situation. The rand, however, has been stronger this morning, about 0.5% stronger at about 15 rand 30 to the US dollar. Gold has been slightly weaker. However, palladium and platinum have been up 3.5% and 2.5%, given the big portion of the global market that's supplied, at least from the palladium point of view, from Russia. So a lot of support for commodity prices at the moment.
Let's take a look at another commodity. Gold prices steady in early trade as risk appetite improves. Talk us through that move.
Yeah, so the gold price has been steady. There are two elements to the gold price at the moment. The one is the uncertainty driven, which creates that safe haven appeal, which would support the gold price, and that's driven by the Russia-Ukraine situation. But on the other side, we've got a rising interest rate environment, which generally is not good for gold because it increases the cost of holding gold, or at least the opportunity cost. And that was driven by comments by the Fed Chair, Jerome Powell, that he expects interest rates in the U.S. to increase by 25 basis points in March, and then probably every 2 months throughout the year by about a similar margin.
Let's take a look at Sibanye-Stillwater. They say they've generated a record 33.1 billion rand in profits for the year 2021. Talk us through the numbers.
Yeah, so Sibanye having a year-end result, a pretty decent result, slightly missing estimates by that the market had. They had a year of two contrasting halves, with the second half disappointing, with a 41% decline in headline earnings for the second half, on the back of lower selling prices for commodities and also higher cost. However, the headline earnings of 12.72 rand are still quite decent for Sibanye. And the other positive is that their free cash flow has improved significantly, and they're sitting with a net cash position of 11.5 billion rand. There is, however, as we saw yesterday, the overhang of the claim from the failed deal, which is $1.2 billion. Unlikely that would succeed, but certainly it is a bit of a negative overhang.
What about Mondi? They've also published their full-year results. How would you characterize them? Did they say anything about their units in Russia being affected?
Yeah, so Mondi, as you mentioned, does have Russian operations. They did, I'll start with that, they did indicate that about 12% of their revenue and about 20% of their operating profit does come from their Russian operations. Management continues to be committed to operating the Russian mill. Most of their operations generally serve the local or domestic market, so there should be at least some ability to operate from that point of view. But the results for the financial year ending December 2021 were ahead of expectations, with earnings per share up 19% to €1.54, and mainly driven by higher volumes and better pricing. However, cost inflation in the second half did start to come through, putting pressure on margins, but still a pretty decent result. The share price down today having been down close to over 20% year to date, given the exposure to Russia. So them and Bala World, two of the, and Naspers Process being the companies with Russian exposure on our market.
Thank you very much for helping us make sense of all the latest market moves. Karl Gevers is the portfolio manager and co-founder of Benguela Global Fund Managers.